Hello and welcome to Real Estate. I am Saloni Shukla. A very happy new year to you from me and the entire real estate team. It is India's biggest investment market, and through this show, we look to empower you to invest wisely in real estate. Over the coming weeks and months, this show will be a most definitive guide into the world of property investments. So let's have a look at what we have packed up for you on our New Year special today. As we leave behind a gloomy economy and a subdued real estate sector, we tell you if the new year will bring back cheer and confidence into the property sector. Looking to make a quick buck on your property investment, we give you a lowdown of top 5 destinations across the country where you could invest in. Are you looking to invest overseas? We take you house hunting to the 5 most sought after cities in the world. Also, Sanjay Dutt, Executive Director, South Asia at Cushman & Wakefield joins us as we take you through what to expect from the property market in the coming year. Skyrocketing inflation, burgeoning debt pile and subdued demand. 2013 was a drag for the real estate market in India. But will these concerns escalate or subside as we enter the new year? Experts indicate that the market sentiment will continue to remain cautious, with capital values rising to a subdued level of 10 to 12%. Prerna Barua tells us what lies ahead for the real estate sector in the coming year.
The real estate market has been battling a phase of muted sales and rising inventory over the last few years. The economic slowdown resulted in property prices shooting up, impacting end-user sentiments and resulting in gradual absorption of residential units. Housing absorption statistics in the first 3 quarters in 2013 also reflect the declining trend in consumer sentiment. But as we move into a new year, experts hint at home buyers taking a cautious stance as headwinds to growth is expected to prevail until the first half of 2014. Speculations are rife on who will form the government in the coming year. Speculators and investors alike are in a wait-and-watch mode until the upcoming general elections in April. Developers too are pining hopes and pending regulatory reforms that are expected to shape the property market in 2014. Demand of residential units are likely to remain subdued over the initial part of 2014 as the market continues to bottom out. Global property consultant JLL indicates that the second half in 2014 is likely to witness a gradual revival in vacancy rates. Also, capital values in the residential segment are likely to increase in a subdued range of 10 to 12% in the new year. The property market in India is increasingly witnessing signs of stress as rising inventory levels pressure new launches and prices. But despite slowing demand, developers are unfazed and continue to launch housing projects. But those most affected are offering freebies with purchase of flats to spur demand and boost sales. The National Capital Region will continue to be the largest real estate market in India with almost 40% share in new residential launches. The new year will see a shift from an investor-driven market to end-user-driven realty market. As we move into a new year, we take you through a few key events that you should watch out for in the coming year. The general elections in April will be a watershed moment for the property market. The current political uncertainty has put on hold key reforms which will be cleared once new government is formed. The market regulatory will release guidelines for the Real Estate Investment Trust or REITs in India. REITs will not just open up new avenues for retail investors but will also provide a lifeline to fund starved developers with easy exit options. Also, the much-anticipated real estate regulatory bill, which could not see the light of the day in 2013, will now be sent to the Parliamentary Standing Committee for further review. Once voted into a law, the bill will set up strong regulatory architecture for the residential real estate sector with better provisions for consumer protection. Another key reform is relaxation of FDI in real estate. The draft cabinet note on relaxing FDI norms proposed easing the 3-year lock-in period for FDI in housing and townships. The Department of Industrial Policy and Promotion has also sought reduction in the minimum capitalization to $5 million from $10 million.
Shooting property prices and lower rate of returns might have turned down home buyers in 2013. But as the real estate sector is currently in a wait-and-watch mode, a great deal of uncertainty which currently exists will be put to rest after the general elections in 2014. Also, regulatory reforms and various speedy clearances of various real estate projects, the new year is expected to revive investor confidence and bring back cheer into the realty market.
Also, let's take a look at what do the top voices in the real estate sector expect from the coming year 2014.
2013 was a challenging year for the real estate sector. Going forward, 2014, I think, is going to be a lot more positive than what we saw in 2013. The liquidity that has caused a grave concern in 2013 in the real estate sector will get better in 2014. There will be more private equity that will come in and play in the real estate sector.
2014, I think, will be a much better year. You're going to see a lot of difference. Elections will decide and indecision making will get over. Real estate buyers in 2013 were waiting for a fall in prices. The volumes came down and people postponed buying. Prices have not come down and are not likely to.
2014 is going to be lot of rush in the prices, lot of increase in the prices, lot of demand will come up because last 1 year people have been holding on to purchasing. The true picture will emerge if a stable government comes. You will see the complete turnaround in real estate prices.
Alright, it's time for a short break. To get our expert opinion on your property matters, feel free to call us or email us. Details coming up on the screen. On the other side, we tell you about the top 5 cities where you could park your money in. More on that in just a bit. Stay tuned.